Okay, so target profit. Not come up that much, and sometimes you might get a little bit worried, overcomplicate it. So I thought it would be a good topic to run over. This is from June 2022, paper 2, obviously, question 15.1. We're going to go through 15.1, and then there's a linked question 15.2. Good one to review some key terms. So if we look at this, we've got Rebecca's currently producing and selling tents, and so let's just highlight some of these key points. So 16,000 tents per annum. Standard cost, so the expected cost of producing one tent, you're expected to use 54 meters at £2.50 per meter. We're going to use 2 hours in the cutting department, who are being paid £12 per hour. We're going to use 4 hours in the assembly department, who are being paid £16.50 per hour. We sell them at a marginal cost plus 10%. So our variable cost of production. So we're going to work out all those items we've just referenced and add 10%. That's going to give us our selling price. So cost plus pricing model. This enables her to cover her annual fixed production cost of 268,000 and achieve a target profit. So what you've got to do is calculate the target profit. So she's saying if she hits the 10% margin, that's going to achieve the target profit that she would like. So what we've got to do is you've got to work out the selling price on a marginal cost model. So work out all the marginal cost plus 10%. That'll give you the selling price. Multiply that by the 16,000 tents. Then subtract even the £268,000 worth of overheads, and that's going to give you the target profit. So if we look at the next slide, we can see where the solution comes in. Okay, so we've got 3 different methods of displaying this. I think I should highlight and reference, probably will do a few times. On paper 2, it's management accounts. One of the key differences between financial and management accounting is that management do not have strict layouts to adhere to, so they can be formatted and laid out in any way you like, as long as you clearly highlight and label the key figures. It's like here, contribution, marginal cost, profit, target profit obviously is the keyword in the question. As long as you're highlighting that, it's absolutely fine. So if we review this, let's just get the highlighter up. First thing to say is just work out the direct materials. So we knew there were 54 meters at £2.50. You get a mark for doing that. Lovely. Direct labour, you knew there were 2 hours at £12. You're getting a mark for doing that. Assembly, you knew there were 4 hours at £16.50. You're getting a mark for that. You got 3 marks. I've got to be honest, you haven't done a huge amount of work here. You've just understood that direct costs are relevant when you're making a decision on marginal costing. That's a gimme for me. Obviously, the revision needs to be there, but that's pretty nice. So you then know your marginal cost, which is your variable cost per unit. That's the bit that you might not be 100% with, is £225. It told you in the question, cost plus pricing, or a added profit to cost, whichever way you want to do it. It is cost plus. We're going to have a contribution of 10% added onto the marginal cost. So the 10% is £22.50. So you're going to get a mark for working out the contribution would be £22.50 per unit. We then say, well, we sold 16,000 units, or we're expecting to, so our contribution is going to be 360. Our fixed overheads in the question were 268, so our target profit is 92,000. God, yes, that's a lovely 7 marks. You could present it slightly differently, so you could go on the alternative. So the alternative is focusing more on the totals. So if we're selling 16,000 units, what the total revenue would be, and what the total material, labour, both cutting and assembly would be, and it still gets you to the contribution, still gets you to the same fixed overheads because they're not going to change, and target profit. Giving you a slightly different one so you could adapt the break-even formula to do it. That seems like a more complicated method of doing it if you ask me, but you could. So you rework the contribution and the contribution per unit and units to work back to get you the figure. For me, one of the other 2 methods, but whatever works for you. Slightly different question on 15.2, so I'll just bring that one up. So now what we're saying is Rebecca expects production sales to fall by 12.5%. So what you need to do, that 16,000 units that you had in 15.1, we need to reduce by 12.5%. Don't fall for mathematical tricks, 0.875 or work out 12.5%, whichever way you want to do it. But what you'll find is that production is now going to be 14,000 units. At this level of production, there'll be a loss of trade discounts, so there'll be a 20% increase in direct material costs. So you're just going to have to reduce your direct material costs by 20%. Fine. Direct labour costs will remain unchanged, but that's not going to be any work then, is it? Annual fixed production overheads will fall by 38%. 38,000, 38%, what am I saying? 38,000 as a smaller factory can be rented. Okay, so we're going to adjust all of those variables. And then they've said calculate the selling price per tent required to maintain the same target profit. Your answer must show the marginal cost per tent. So for me, as I said with 15.1, you work out the marginal cost first, and then you can follow the same approach now. So what you're going to do is you're going to update the trade discounts. So for the direct materials, you're going to update the cost of your fixed overheads, manipulate all of that, and then we can work backwards and try and find out the price. That's not really well explained because you need the numbers, and I think if I show you the mark scheme and talk you through the approach that they've given, hopefully I can highlight that this question is quite quick to do and it isn't as bad as it may seem. Some of you might think this is great, I can smack this out of the park. Some of you will like, not so sure. But let's see the mark scheme and see if we all can agree. So what we've got, so first thing we're going to do is we are going to increase those direct materials by 20%. That is the most logical thing to do. So I'm going to go direct materials, added 20%, £162. We already know the direct labour is not going to change, so that is £90. So we now know that our marginal cost per tent is £252. But because factors have changed, we're not having a 10% contribution anymore. We're saying what selling price could we sell to maintain the same level of profit? So this is where that target profit idea is really factored in. So to get there and to get to this £23, which is worth 3 marks, so the majority of the marks in this section, what we've got to do? Well, the first thing we're going to have to say is we have a reduction in fixed costs. So our fixed costs are now 230,000. So our units that we sell only have to cover £230,000 worth of fixed overheads. That's good. But we've said in 15.1, and this would be own figure. So if your target profit in 15.1 was not 92,000, you just add in whichever target profit you worked out. Hopefully it was 92,000, but if it isn't, you can't be penalized twice for the same error. So we've got 92,000. So we add the target profit. So effectively, those units that we sell need to cover 322,000. So they need to cover the 230,000 worth of fixed cost to break even, and an extra 92,000 to hit the target profit that we would like. And so we've already said, or I said in the previous slide, that you're now selling at 14,000 units. So 14,000 units need to cover £322,000. So if you divide 322,000, divide it by 14,000 units, our contribution per tent now needs to be £23. So we need to make £23 per tent to hit our target profit and to hit our fixed overheads. So if we do that, we will have to sell our tents for £275 each. Now the question very clearly says marginal cost must be clearly labelled. So if you just put selling price 275 with some numbers, you're going to lose a mark, which you really should not lose. So please read the question very clearly when you're doing one of these. Any question you do in accounts, you should read the question, but just make sure you're following all the requirements, because that's a silly mark to lose if you know exactly how to do it. But target profit doesn't come out that often. This actually was 3 years ago now, obviously. So it could well be it's time again. So make sure you can tackle these questions.